Let's see how can we create the best stock portfolio that fits your particular needs. In this video, I will go over different portfolio types and also some famous portfolios. Then we will examine how to use the information from those stock portfolios to create the best stock portfolio for you. As usual, at the end of the video, I will share with you what is my portfolio setup and why is it like that. If that sounds interesting to you, then feel free to stick around and find out more. What's up, strangers? If this is the first time we meet, my name is Vedo and I'm here to help you better understand the wealth game and become part of the wealth game nation. Building wealth is a game that the wealthy play. It is a counterintuitive game, and even though it is still a game, the sooner you start looking at building wealth as a game, the sooner you can learn the rules of the game and take part in the game. On this channel, I cover everything related to personal finance, investing in the stock market, cryptocurrencies, real estate, and everything related to the game. So let the games begin. As I have covered in one of my previous videos, we have 6 major asset classes that we can choose from when we build our own portfolio. I will not go into those details here, but shortly, those asset classes are stocks, bonds, cash equivalents, real estate, commodities, and cryptocurrencies. If you're interested to hear more about those asset classes, the link to that video is in the description below. Now, there are 3 types of portfolios based on their strategy, and those are growth portfolio. As the name itself reveals, a growth portfolio's aim is to grow by taking greater risks, including investing in growing industries. Such portfolios are usually higher risk, higher reward plays. Investing in growth usually entails investing in younger companies that have more potential for growth when compared to larger, well-established companies that have less room to grow. Such companies usually pay little to no dividends as they use all their profits to expand their business. Income portfolio. Again, the name reveals it. Income portfolios are focused on regular income from investment as opposed to growth. In this case, the investors buy companies based on their regular dividends and they are not too concerned with the increase in value of that stock. Those companies are usually larger, older, well-established companies that are not growing as much, but they are producing regular profits. Value portfolio. This is like sale hunting. You look for bargains. Something my wife is an expert in. In such case, the investor is searching for assets that have low valuation. This usually happens during difficult economic times and they are influenced by other macroeconomic factors. The reasoning here is that after the difficult economic times are over, those companies will rise in value and the investors have bought them at bargain prices. If I could only teach my wife to invest, she would be the perfect bargain hunter as she is able to find sales everywhere. So, depending on your own preferences and time horizon, you should be able to identify what your strategy should be. In case you have a longer time horizon for investing, then perhaps a growth portfolio might be appropriate. If you have already some money and you would like to use that money to produce income, then an income portfolio seems like a better idea. Value hunting, in my own personal opinion, is only supplementary to the other 2 strategies as we are not always in difficult economic times and it's a bad idea to wait around for them to happen so that you would invest. There have been enough studies that have shown that even perfectly timing and buying the dips, which we all know is not possible, does not produce better results than regular dollar cost averaging. Now that we have established what asset classes we can invest in and what investment strategies there are, let us look at some of the more famous portfolios. Classic 60-40. Created by John Bogle, founder of Vanguard and the creator of the first index fund, comes this simple and effective asset allocation that follows the stocks and bond markets with only 2 inexpensive index funds. The allocation here is total stock market with 60% and intermediate bonds with 40%. 3-fund portfolio. Similar to the previous one, this one is created by Tyler Larimore from the Bogleheads. This portfolio prioritizes simplicity in diversification by owning the whole world in just 3 low-cost index funds. The allocation here is total stock market with 48%, international stock market with 12%, and intermediate bonds with 40%. All-weather portfolio. Created by Ray Dalio, the founder and chief investment officer of the world's largest hedge fund, Bridgewater Associates. This portfolio aims to be easily implemented by everyday investors. The allocation here is total stock market with 30%, long-term bonds with 40%, intermediate bonds with 15%, commodities with 7.5%, and gold also with 7.5%. Golden Butterfly Portfolio. The Golden Butterfly Portfolio prioritizes consistently desirable investments growth by balancing economic conditions with an eye towards prosperity. The allocation here is total stock market small cap value, long-term bonds, short-term bonds, and gold, all with an equal distribution of 20% each. So, depending on your own preference and risk tolerance, you should be able to identify at least the direction in which you want to mold your own portfolio. You can take any of them, combine them, modify them, and make them so that they are to your own liking. Once you have done this, make sure you dollar cost average, meaning decide on the amount of money you want to invest it on a regular basis, and be consistent. If possible, set up automatic purchases and forget about them. Also, it is important to rebalance your portfolio every 6 months or so. For example, if you're going with the classic 60-40 portfolio, then after 6 months, it might be that your portfolio is now 70-30. Here, a rebalancing would be appropriate. If you find value in this video, you will be doing me a huge favor by liking this video, subscribing to the channel, and sharing it with your friends. This helps me a lot when you guys do it, and it does not cost you anything. In return, I will do my best to help you become more financially literate much faster than I did. By sharing my insights, my journey, and teaching the rules of the game that the wealthy play, you will be able to take part in the game in no time. As for myself, all of those different asset classes, strategies, and portfolios are fine, but none of them float my boat. Therefore, I have created my own strategy based on my own personal beliefs, time horizon, and risk tolerance. Due to my personal beliefs, I am not interested in bonds nor cash equivalents. Due to my personal preference, commodities are not appealing to me. This leaves me with stocks, real estate, and cryptocurrencies. So, I invest in those. As cryptocurrencies are part of my crypto portfolio, around 5% of my money, and my real estates are real properties, around 65% of my money, let us look at the stock portfolio setup, which accounts for about the remaining 30%. Due to my time horizon, for now, I'm mainly interested in growth portfolio. My long-term portfolio looks like this: 30% in ETFs. Here, I invest in different growth ETFs, such as the Nasdaq 100, healthcare, semiconductors, robotics and automation, Nasdaq Next Generation, future mobility, etc. 30% is in what I identify as blue chip, high market cap stocks, such as Apple, Alphabet, Amazon, Nvidia, Meta, Tesla, and Microsoft. 30% is in what I identify as stable, mid-market cap stocks that also pay some dividends. Such companies are Home Depot, Waste Management, Disney, Procter & Gamble, Sony, etc. The remaining 10% is in what I identify as volatile, growth, small market cap stocks that usually just give me a headache. Those are companies like Coinbase, Matterport, Unity Software, Roblox, etc. As I can never get enough of action, I also have another smaller portfolio dedicated to swing trading. For those who are not aware of swing trading, this is everything you hold for longer than 1 day but shorter than 1 year. Buying and selling stocks within the same trading day is called day trading, also known as gambling. Even though I like me some good action, I would not even dream of attempting day trading. Everything longer than a year is considered long-term investing. So, that wraps up the portfolio setup talk for today. I hope you're able to use this information and create a portfolio for you which will help you reach your financial goals. Now, you tell me, do you follow a particular portfolio setup or do you just wing it? How does the allocation in your portfolio looks like? Any headaches in your portfolio? Don't be a stranger. Leave me a comment below as I'm really curious to read about it. That's it for now. Thank you so much for watching. I hope you enjoyed it and I'll see you in the next game. Do you know the difference between a pigeon and a day trader? The pigeon can still make a deposit on a BMW.